You heard Stephanie Link yesterday telling us she bought Alphabet on the pullback. She's been telling you that she's been trimming Meta into the print. Now we get the results. The stock's down. Steph joins us now, of course, with Hightower, the chief investment strategist there, a CNBC contributor and a committee member. So, Steph, first thought to my mind was like, I know Link. She's probably buying Meta today. She's probably buying it on the dip because that's how she rolls. Are you doing that?
Yeah, well, I am very tempted. I'm just going to let it settle for a couple of days, but this is definitely a better buy than a sell for sure. I mean, look, the quarter was outstanding. It was offset by the cautious commentary about the geopolitics and also very high expectations. The stock was up 141% into the print. But they just beat earnings. They grew revenues 23%. Operating margins were the best in 2 years. So you have year of efficiency and you have growth. By the way, I mean, Reels going neutral to revenues, that no one thought that was even possible 6 months ago. So that was a real highlight. And Reels actually drove 40% of engagement for Instagram. You have Advantage Plus at a revenue run rate of $10 billion. You have AI increasing engagement 7% to Facebook and 6% to Instagram. So AI is certainly helping. They are monetizing it. I think this is in early innings, and that's the reason why I'm more of a buyer than a seller. But I understand that the stock is crowded. I think all the FANG stocks are crowded. That's what the reactions are telling you. But this is not a fundamental problem. And if anybody wants to chip away at the guidance was fine. Revenues were a little bit wider because of the uncertainties macro. I think that's very prudent. It's still going to grow double digits for next year. And the things that they can control, which is expenses and CapEx, that was lowered. Both were lowered. And that's exactly what we wanted to see. So you have a strong product cycle story, many different products. You overlay that with AI, and you have a stock trading at 14 times, as well as a company that is committed to keeping the cost pressures down.
I hear you.
Yeah, it's better buy than sell.
I hear you. It all makes perfect sense. The problem with all of that is that it might not matter, because if you have a different kind of market now where everything you said is true, and Microsoft had a great report, and the stocks are still going down, that's telling of a different kind of market.
Well, there was an elephant in the room.
For now. For now, Scott. For now, absolutely. But fundamentals will eventually matter. And the fundamentals of this stock, Meta, was so much better than it was better than Alphabet, but I bought Alphabet because I thought that was absolutely ridiculous, because 80% of their business is advertising, not cloud, and it acted like it was the reverse. And so Meta, I think, there's no blemishes whatsoever on this quarter or the guide. It was just a cautious commentary. So it will matter at some point. But again, it's up 141% on the year. And that's why you got to let some of the froth out. Let all the panic selling be done with, but I'll be back in if the stock falls materially from here.